Hey class, I just want to give you an example of merchandise inventory for chapter 5. Let's go ahead and check in our textbooks on E-5-2. In this example, I'll actually go through the whole example with you, and I'll just have you put it on your spreadsheet that I provided you in the doc sharing, and you can just submit that um, with the rest of your homework. I'm okay with that. We'll go through that in here, and you just let me know if you have any questions, and it's going to be the same journal entry, so let's go ahead and move forward. On April 5th, Stevens Company purchased merchandise from Bryan Company for $25,000, terms 210 net 30 FOB shipping point. So basically right here what we're going to do is we're going to have April 5th as the date, and our debit is going to be to merchandise inventory. So to make this a little bit easier, I can just actually copy and paste my other screen. So when we buy things in regard to reselling them to a customer, we're going to be debiting a merchandise inventory account. And this is going to be in the amount of $25,000. Our corresponding credit will be to accounts payable for the same amount. The second one, April 6th, paid freight costs of $900 on merchandise purchased from Bryant. In this situation, when just say your company is going to sell merchandise to a consumer, and you pay the actual freight costs purchasing it from your wholesaler, and you'll see these examples when you read the text. If you pay for the actual shipping, you're going to actually debit merchandise inventory as if it was part of the inventory. So it actually is the cost is associated with that. So we're going to have April 6th right here. Actually, this should be April. And we're going to go ahead and debit that to merchandise inventory for $900. And our corresponding credit is going to be cash. Since it's probably saying that, oh, it's not just freight costs, so never going to be on account. You're basically going to pay those in cash. April 7th, and I'll let you guys take care of that. I just want to get these journal entries out of the way. April 7th, purchase equipment on account for $26,000. Equipment is not going to be resold for a profit. We're actually going to use that in our operations, so we're not going to debit that to merchandise inventory. And that's going to be $26,000. Our corresponding credit is going to be accounts payable for the same amount. So basically, the relevance for this question was to make sure that you do not include that in merchandise inventory, because we're not reselling that. April 8th, returned damaged merchandise to Bryan Company and was granted $4,000 credit to return merchandise or for returned merchandise. We're going to debit accounts payable, and the reason why we're debiting accounts payable is that we no longer have that liability of paying for that. And that's going to be for $4,000. And we're going to take it out of merchandise inventory by crediting it for that same amount. April 15th, pay the amount due to Bryant Company paid in full. Remember the terms up here, basically 210 net 30. So within 10 days on April 5th, add 10 days, that's going to be the 15th. So he's got time. So he's actually going to get that that discount. So we're going to go ahead and debit accounts payable, and that's going to be 21,000. And the reason why it's going to be 21,000 is you're going to have $25,000 minus $4,000. And our corresponding credits will be to merchandise inventory for $420. And how I got that was I took $25,000 minus $4,000 and times that by the 2% cash discount that we get. And that corresponding credit is just going to be the difference between 21,000 minus 420 or 20,580. So let me know if you guys have any questions, and I'll let you try B on your own. And B is basically just going to be 21,000 debit accounts payable, credit 21,000, same thing.